If you want to see changes in 2026, I mean, you want to see a different you when it comes to trading, different from how you traded last year or how you were last year or your experiences last year. All you need to do is to stick to one pair, one strategy, one trading system, and that has been the game changer for me. So guys, welcome back to my YouTube channel, and if you're new here, you're welcome. The Soft Trader Journal. Here I document how I trade softly without any stress, without overcomplicating things. All I do is just to keep things very simple. Like, simplicity is the key for me. And I trade only NASDAQ with supply and demand, alongside market structure and price action. So I'll be showing you a recap of the trades I took in this past week. Well, I did not really trade much because I had some no trading days. I rather choose to have no trading days than have days where the market ripped me of my money because I was impatient or because I was doing the chasing game. So I had no trading days, and like yesterday I did not even check the chart at all because I was completely off. My mood swing just took over yesterday, and it was like a reset day for me, like a reset mood for me. So let me take you to my system now so you can see the trades I took and how I took them, so you can familiarize yourself with my strategy. Okay, so this is my weekly time frame, and from October, as you can see, we've been finding it so difficult to break the all-time high. Like, this is the all-time high, and past since then price has been ranging from the higher time frame. Yeah, so trading supply and demand actually helps me to do setups, at least not every day of the week, but then most of the days of the week. So that's one thing about my strategy. And price action also would help you at least find one setup or the other. So despite what is happening on the weekly time frame, so let me go to my daily time frame so we can see clearly. Now look at what I meant by market has been ranging. If you see this point now, this was our last break of structure. Our last break of structure was even around October 10, thereabouts. It was still that same October when price broke this structure to the upside. But ever since then, it's been so difficult to even break out of this all-time high. Like, it's just been ranging and consolidating here and there. But then don't forget that one candle on this time frame represents a clear uptrend or downtrend in the lower time frame. That's what it means, because this is a daily time frame, so we have 24 hours daily. So if you go down to your lower time frame, you're going to see scattered candles breaking down in trends. The green, you see it breaking down in a clear uptrend, while the red you're seeing here on the lower time frame, it's going to give you a downtrend. It is from that time frame, that lower time frame, that we're able to fit ourselves in to trade something. Yeah, so this ranging, I've been using the scalping strategy most of the time, because as a trend-based supply and demand trader that I am, I flow along with the trend. So if I see a clean trend, for example, this candles you're seeing here per each day, if it gives me a clear trend in the lower time frame, and I'll look for an entry, either a supply zone or a demand zone, then I'm going to trade along with the trend. So that's what I do. So let me just go to my 15 minutes time frame where I always execute my trade and show you guys some of the trades I took. Okay, so this was one I took on Wednesday. Like I said, I did not even trade yesterday, Friday, because it was a complete off day for me. And from what I'm seeing here, except those who trade support and resistance, they might be able to get a setup, because this angle here has to be support zone, and of course the market got into that support zone and pushed up to the upside again for those people that trade support and resistance. So now let me go to the trade I took. So now on this particular setup, I think I spotted, let me go to my 3 hours time frame. Okay, so let me change this back. Exactly. So if you look at this market that I traded, see what it looks like on the 3 hours time frame. You can see that push up to the upside by the buyers. Like the buyer pushed the market aggressively to the upside. So it was from this particular candle that I was able to execute my trade in the lower time frame. This is the 3 hours time frame. So let me go back to my 15 minutes time frame and show you what I saw that made me got into this particular trade. So as you can see here, okay, when I executed this trade, I spotted this particular zone here that I marked. You can see it more clearly as a minor internal demand area from the 10 minutes time frame and also the 5 minutes time frame, but this is 15 minutes time frame, so you might not really see clearly. But let me go to 5 minutes here, because on this trading view I can't access my 10 minutes time frame here unless I pay, but I can access that on my Meta 5. So let me show you what it looks like. Okay, so can you see? So this was like a zone for us on the lower time frame, 5 minutes and 10 minutes. So if I switch the candle back, let's say to the Ekinashi, you can also see it more clearer there. Okay, this is it. So this was the setup that I took on Wednesday. So how did I take the setup? I actually marked this breakup structure that I saw here. It was a minor one. This is one also. This is one also. This one did not get tapped instead, but this one the market reacted. And don't forget, despite trading supply and demand actually help us get a precise entry, helps us get or help us know the right time to enter and exit, because we know when the buyers or the sellers are taking over the market. But aside using supply and demand to actually get your entry, I trade price action. Price action is actually you flowing along with what the market is showing you, how the market is reacting, not based on your assumption. So from what I can see here, I can see that when the market pushed this, when the buyers pushed this market up here, when they pushed it here, picking this structure, and the sellers took it from them. So don't need to jump on the trend, because I can see red candles going down, or I can see red candles going up. I only need to fold my hands like this and just watch how the market reacts and see if the market will give me a better entry. So entry confirmation. So what I did was I noticed how the market started reacting in that zone that I marked down, and why the market was reacting, because I don't trade on 5 minutes actually. So let me go back to my 15 minutes time frame. Yeah, so price was ranging. As you can see, price was ranging in that zone. If you go to 10 minutes, you can see it more clearly. Well, okay, for the sake of this video, let me just use 5 minutes for my explanation. But I don't like to trade on 5 minutes actually. So now I saw that the price was reacting. Can you see? So it was more like the market was ranging. It wasn't really breaking out as expected. It wasn't breaking out as expected. So what I did was, I don't want to just get in based on assumption, because the market might just be trying to pull back a little bit before continuing to the downside to go hit or expect the demand zone that was below. But instead, I just had to wait and allow the market show me what it wants to do. And from what you can see here, you can see that I marked the high of that consolidation, that range in that zone. The market only broke it out a little bit, but did not give me clear breakout. So as at the time I saw this market, I had to mark the high. I told myself one thing, that I want the market to go and break the ranging and also break the candle that tapped me in fully on my 15 minutes time frame. When I say break, I want to see a close of the candlestick, a bullish candlestick closing outside of that range, then closing above the candlestick also with a full body, without any weakening or without any rejection. Because you can see the way the other candles that broke that tried to break out of my zone has been reacting, it's not convincing enough. So I wanted more confirmation. So I waited for that to break out, and I finally found this. Immediately I got the close of this candlestick that broke outside of the range on my 15 minutes time frame. All I did was to get in at the opening of the next candle. So I got in, and after getting in, this was what the market did. So I use my normal candlestick to enter the trade, to execute the trade, but I use my Ekinashi candlestick to monitor the trade and also manage the trade. So this was how I was able to catch this move. It's less than 1.2, but then again, I was able to catch this for my trade on Wednesday. And after the market still broke out the structure, because I expected the market to go up here and ride the trend to break this also, but the market broke it, and now this was what happened after it broke out. I don't know why I wasn't just in the mood to trade yesterday, but this was my Wednesday trade. Now for my other trade on Monday, was it Monday? Yeah, on Monday, I caught something little. And what did I catch? This was it also. If you go to the higher time frame, don't forget any trade I am taking on my lower time frame, it is backed up by the strength coming from the higher time frame. Either a structural based trading, that means I actually got a confirmation of a supply and demand zone getting tapped or triggered from the higher time frame, let's say 4 hours, 1 hour time frame. Then I narrow it down to my lower time frame to execute the trade, or I actually got a very clean trend from the higher time frame, like the market trending high. It necessarily does not have to be that a supply zone got tapped, and I went down to my lower time frame and got to my execution time frame to mark the most recent break of structure, then mark out the base, then wait for the market to come and tap me in. So that's for my scalping. But if I want to do like day trading or swing trading, then I just wait for, or I get opportunities from the higher time frame, then wait for confirmation, then I hold the trade based on the higher time frame bias. So that's just it. So for this one, you can see that this particular day, it was actually like a retracement. You understand? So what I did was I had to get an opportunity also. For Wednesday trade I will just review it now, it's actually based on a demand setup, while on Monday trade was based on supply setup, and this was the setup I took. Supply setup, the market was trending down. It shows clearly that the sellers were in charge as at this particular time, and you can see the aggressive push down continuously to the downside. So what I did basically was that I waited for a pullback. When I spotted this internal minor break of structure, the downside, waited for the price to come and tap me in, pulling back into my supply zone, and the market tapped me in. I also waited for the break of that candle, and look at what I got. I got this move. Sellers continue to push the market down, and I just took my little profit and I was out. Most of my trades are less than 1 to 1, 1 to 1.2, 1 to 1.5 sometimes, but I'm trying to see how I can stay consistent with maybe 1 to 1.2. Yeah, that means I have to always go in like high profit, high capital. If I'll be taking 1 to 1.2, 1 to 1.2, then that means my capital needs to be more for me to be able to make something tangible. But then the win rate is always higher. The win rate of 1 to 1, 1 to 2, 1 to 1.2, 1 to 1.5 is always higher than the win rate of 1 to 2, 1 to 3, 1 to 4, 1 to 5, thereabout. So this was actually the trade I took this week. This just completed week on Monday and Wednesday. A no trading for me is always a win day. I don't trade every day. Trust me, I don't trade every day. I don't force setup. If I don't see these two supply and demand setup I just showed you right now, I don't take a trade. There's no point. The thing is, markets will keep trending up, trending down at every time. but that doesn't mean you just have to jump in like as you see the movement of the candles. That's why people need to understand that you don't respond or react to the movement of candles. Like, your emotion should not get triggered by, oh, green candles are going up, oh, let me go in, buyers are in charge. Red candles are going down, oh, let me go in, sellers are in charge. No, you react based on market structure. And that is why when your trade is looking like it's a stop loss, or when your trade is going in minus and you're panicking, your emotions are triggering, and you're scared, that means you don't know what you're doing when it comes to understanding what market structure means. Market structure is like the backbone of technical analysis, because market structure tells you the direction of the market, and not just the direction of the market. You need to understand the rules guiding market structure. I basically trade the rules. That's why I said I have a strategic approach I use, and my strategic approach consists of supply and demand, market structure, price action. Like, I combine everything together. That's what helps me react to the language that the market is speaking on my charts. That's what helps me to react to what the market is actually showing me, not based on my assumption, not based on what I think or what I feel, but based on what the market is trying to tell me. So this is just me actually just showing you briefly how I traded last week. If I don't see these two set up daily, if I don't see either of these two set up I just showed you, either a clean trend to the upside that keeps breaking structure, creating series of higher highs and higher lows, or I don't see a clean trend to the downside by the sellers, breaking structure, creating series of lower low, lower highs, and giving me that break of structure, then that day is going to be a no trade day for me. So guys, thank you for watching, taking your time to stick to this point. And if you just see my face for the first time, make sure you hit the subscribe button so you can always get notified anytime and every time I drop more content explaining how I trade.